People think that investing is just for rich people or you need a bunch of money to invest. That's not true. I can get you started with $20.
Retweet.
I need you having money because I need you to have agency over your life. You need a prenup. And I know we don't want to talk about prenups. Nothing bad happens when women have money.
Thank you.
Nothing bad happens. And especially right now, I need women having their own money.
I think it's really interesting because I think a lot of people are like conditioned to spend money a specific way just because it's done that way. And like we didn't have a wedding. We put our wedding money into our business and it turned out so well. So
Yep. I couldn't agree more. I think there are certain things about money that you're expected to spend. Like I'm a multimillionaire who rents. Like I don't even own a home.
Yeah.
And people find that insane.
Okay. So I own a home and then I also rent currently. Like now I've like rented out my place in Toronto. Oh my God, being a landlord is really not great. Like now I'm like renting for really like the first time in my adult life because I've owned my property for a long time in Toronto. And being like having a landlord where I'm like, my shower doesn't work. And they're like, great, sending someone over. I'm like, what? This is amazing.
It's so nice. Well, and that's what I think people don't realize is like we get told renting's throwing money down the drain. I'm like, no, I pay, it's a luxury to rent.
Totally.
In a lot of ways. It's like, yeah, I call somebody and in theory, their landlord should be good and actually handle it. But
of course,
I'll call somebody and cool, the toilet's overflowing. That's handled.
Yeah,
something happens, great.
When you're a landlord, I feel like there's so like it's all your responsibility.
Or a homeowner, yeah. And I wish more people understood that as well. One, homeownership is not accessible for the average person anymore. But two, and I love that we might be on mic already because this is already
Wow. Okay. Wait, great.
Well, and the second thing too, okay, so assuming you can financially buy a home, which most people can't, the second thing is like, do you actually want to? Like,
yeah, totally.
Not only do the numbers make sense, but do you understand all of the additional costs besides just the mortgage? Do you understand the labor? Do you understand that, yeah, this will be at times significantly inconvenient? Does that fit the season of your life? And if it doesn't, okay, that's okay.
Yeah. I think people put a lot of pressure on themselves. And like, my dad is in real estate and he's like, I don't think you should buy unless you are like planning to be here for a long time. Like he's like, never feel pressured to buy. And he's literally in real estate. Right. So I'm like, I'm happy I got that advice like from a younger age. Yeah, and like having done both, I'm like, I'm actually very happy renting right now.
Happy with my decision.
Yeah. And also this way, like I don't know, like it's nice to be able to move to a different neighborhood if I want to, you know, like
it feels non-committal in the best way possible.
Exactly.
Where it's more flexible.
Especially I think if you're in I'm in a new city still, like, I mean, we've only been here for 3 years, so it feels good this way.
And like post-COVID too, and it's just like a weird transition.
It really is. Okay, so I want to start, well, we've already started, but I guess another thing that since we're talking about this is, what are some financial myths that you often hear that you would like to put to bed?
Oh my God, there's so many. I mean, I literally wrote a whole book about it. I think, yeah, there's all of these sort of, Ramit Sethi, who's another financial expert and friend of mine, he calls him...
No, you don't understand. He changed my life.
Oh, that's great. I'll pass that on to him.
His book.
Yeah,
and
it's
I'm
fantastic.
Obsessed with him. He's great.
So yeah, I quote him in my book and he's been on my show a million times. But one of the things he talks about is like these invisible scripts. That's the way he frames it. But like for me, it's the money narratives. Like what are the ways that you've been taught about money or not taught about money? So one of the first ones that we all know is that like money's taboo, so we don't talk about it. So statistically, we're more likely to talk about sex, death, politics, religion. We will talk about anything before we will talk about money.
Why?
Because we equate our net worth with our self-worth. And because money is so wrapped up and in shame and anxiety and fear that I feel like if I tell you how much debt I have, or if I tell you how much I'm making, you're going to judge me in some way. You're going to judge me that maybe I made a stupid choice, or you're going to judge me that I have a lot of money and that I'm doing well. And that might change our relationship, right? And so there's so many of these, again, spoken but unspoken narratives specifically for women. So yeah, don't talk about money. Wanting money is bad.
That one drives me insane.
That one drives me insane too. And especially it's so damaging for women. I want what money can buy me. Right? Like, I don't want a stack of government issued paper that doesn't get me anything. I want the choices that money offers. And especially right now, I need women having their own money because having money makes you uncontrollable. It allows you to exercise your self-worth. When you have money, you don't have to put up with shit from anybody. You get to make conscious decisions, intentional decisions about the way you want to live your life. But we've been told that the pursuit of money is wrong.
Well, this is the thing. I think it's unfortunately like such a myth, and I'm glad we're talking about it, because I feel like money is like a magnifying glass. Like it just makes you a lot more of what you already are.
Absolutely.
You know, so if you are a good, charitable, kind human, you will use that for good. And if you're not, like, those are probably not the choices you're going to make. But I don't think it's just like objectively bad to want to be like have this thing that makes you independent in this world.
Nothing bad happens when women have money.
Thank you.
Nothing bad happens when women or any marginalized group has money, because we will pour it back into our communities. We will start businesses and give people jobs and donate to the kind of policies and people we want to see in office. Like, everything changes when women have money, because again, you're no longer stuck. You're no longer controllable. I talk a lot in Financial Feminist, my book and podcast, about all of the ways that we are limited in our choices when we're limited with our money. So 99% of abusive relationships have some sort of financial abuse tied to them. And when you hear a stat like that, you realize that money is used as a form of control.
It's like a weapon.
It is. And it's also the best way to level up and to be able to, again, find safety and security and happiness. Like I was just interviewing Ash Perez. Do you know who this is? Worked at BuzzFeed, is now part of the like extended Try Guys cast. He is a trans man, and I just literally interviewed him for my show yesterday. Even that is a perfect example of like, I can now afford the kind of gender affirming care that makes me feel safe and okay in my body, and I can live in a city where I'm less likely to get literally physically attacked.
Yeah.
That's more expensive. Living in LA, a Seattle, a coastal city, or New York, right? Those are more expensive cities in the middle of Kansas. So there's so many reasons and examples I can point to of like, money allows you the ability to exercise your self-worth. It allows you the ability to show up as the best version of yourself. And if you are the person listening who has said, oh, pursuing money, wanting money is gauche, or I feel guilty for pursuing money and it feels bad, it feels wrong, it's not wrong. I need you having money because I need you to have agency over your life.
You know, when I was younger, I would hear stories of these women who were trapped in bad marriages because they were fully reliant on their husband, or they'd have to turn a blind eye and just like pretend. And, you know, unfortunately, even though they had given up their lives, or even, and I don't mean giving up as in a bad way, right? Because some women are very fulfilled by taking care of their children, and I think that that's like one of the most noble jobs that someone can have, honestly, and very fulfilling too. But fact is that they would put their own like financial benefit aside and like choose to raise their family, or you know, look after their household, and then the husband would go and kind of like take advantage of that because he had the power, like, from the money.
It still happens all the time.
All the time. And so
we're seeing a glorification of it now, right? With like trad wives and like this idea of a soft life. And like, I get it. We all hate capitalism. We hate the hustle and the game. And it's just like, wow, can I just like breathe and live my life? Oh, I'll rely on somebody else and he can bring home the money. That's great until you no longer want to be in that relationship. And like the dramatic part is the abuse, but like even just actually this relationship isn't fulfilling in the way that I need it to be. You can't leave. You don't have your own money. You don't have your own credit. You don't have your own funds to be able to do that.
So, okay, I actually want to speak about this type of woman because again, like if a soft life is for you, I think that is great. Okay. I really do. But I think what I want to know is how can someone like
protect themselves? Yep, absolutely.
And I think that that's a really practical way of talking about it, because not everyone wants to start this like very large business or whatever. So what do they do?
I love this question. So my mom was a non-compensated working mom, and Tiffany Dufu was a guest on my show, and she does not use the term stay-at-home mom because moms who stay at home, they don't just stay at home and eat bonbons. That is, to your point, one of the hardest jobs. Right.
It's work,
so
man.
What I love is, and this is vernacular that I have started using, is non-compensated working mom, right? You are non-compensated, you are still working just as much. So when I say non-compensated, I mean stay-at-home moms, right? So non-compensated working parents, and just in general, and I'm going to assume in this case for women, when you are making the active decision to either step back from your career or say, okay, I am going to spend a couple years or potentially the rest of my life in a caregiving role, a couple things you need to think about. One, you need a prenup. And I know we don't want to talk about prenups. I know it feels like, it means that I'm going to get divorced someday, right? But it's like,
you would never go into a business without a contract. Why would you do that in like the biggest business of your life?
We hope we don't get in a car wreck, but you have car insurance just in case something happens. And also, we know from so many statistics that the couple who has conversations like this that feel difficult in the moment are less likely to actually need things like prenups, because they've had a conversation about what to expect, what their values are. So you actually have a prenup if you get married in the United States automatically. Just the state has decided what your prenup is. So I live in Seattle. Washington State is a 50-50 split. And I don't want the government in my business. I don't want the government in my marriage. If I decide, hey, actually, that's not going to work for me. Either, I have debt that I'm bringing into the relationship, or I have assets, or I just want to make sure that we're both okay should something happen. That needs to be decided on. So you actually already have a prenup. I need you to take ownership of what that actually looks like. So that's the first thing before you even get married. Second thing is having some of your own money. Now, it doesn't have to be a ton of money, right? But you and your partner need to at least have some separate money, because again, I want you in a relationship because you want to be there, not because you're forced to be there. And the more fun part is like, I want to be able to spend some of my money without having to like check in and have a family discussion every time it happens. Like my parents do this. Again, my mom's a non-compensated working mom. My mom has her craft money, right? She like does scrapbooking and crafts. My dad goes and like plays golf and poker, and like they both have their own money that they spend on that, but also they're not getting divorced anytime soon, but like should that happen, they have some of their own money then. And I think the third thing is to take an active role in financial decisions. Stereotypically, in a heteronormative relationship, so man and woman, dating, married, whatever, we see that men tend to handle these big financial decisions, the investing, the real estate, right? The life insurance or the wills and all of that. Women are handling the day-to-day finances, the budgeting, the coupon clipping, the grocery shopping. I need both people to take an active role in both of those sectors. I need men understanding what's going on in the day-to-day, and I need women understanding how to invest, what's going on with our money, where is it kept, who is the beneficiary on this money. And I know, because I can hear your listeners, they're going, oh my gosh, but this sounds like so much and it sounds intimidating. Here's the deal. You cannot be a passive participant. And you also don't need a degree in finance. I majored in theater and communications, y'all. Like, I did not study business. I didn't study finance. I'm a multimillionaire. This is not hard. This is not about numbers. It's not about math. It's about psychology. It's about emotions. It's about understanding what goals you have and how are you going to use money as a tool to get there. And you uniquely are actually really good at that, because men tend to be, oh, what's going on in the graphs and charts? And women are they're more better. Jesus, let me try that again. Men tend to be about the graphs and the charts and the numbers, but women are actually better investors than men because they understand the goals and the psychology. So that's the third thing, is be an active participant, not only in those day-to-day decisions, but those big like financial decisions.
I think it's really interesting what you said about women feeling very like intimidated by investing, because I was one such woman at one point in my life.
Can we talk about that? Because it's the most
so
common
dumb.
thing I see.
And I was thinking about, when I was working through this myself, I was like, why? Like I have successfully done everything in my life that I've put my mind to. I know I'm a very capable person. Why is it that with this specifically, why have I told myself that I can't invest my own money and that I don't need to really worry about it right now? And I was like, oh, it's because when I was younger, I was told I was bad at math.
Yes.
And then I was like, wait, this is stupid, because this isn't really that, and it's not, I'm not doing algebra when I'm investing my money. And so I was like, I need to be educated on this because I just need to be. And like, for me, I'm also someone who's like, if I'm bad at something, then I want to get good at it.
Yeah.
And then now I'm like, this is the most fun ever.
You
like,
have
I
the
love
exact
doing it.
right attitude. And it's what I wish more women understood. So a couple things I want to break down what you just said there. One, you're 100% right. We grow up, and we could have a whole separate episode about this, of like women around age 7, or girls around age 7 or 8 are then told like money's complicated or math is complicated first, right? And like, you're probably good at writing or reading, but the boys are good at math, right? And this is the age where even if you were a girl who was really good at math, you start then doubting your own skills. And then when we get to, adulthood, we start having conversations about money, or we start looking at all the graphs and charts, and we're like, oh my gosh, this is about math and I'm not good at math. It's not about math. It's about psychology. It's about emotions. And again, I'm sitting here as a liberal arts major. It's not about math.
Anyone can learn it.
And that's the second thing.
Anyone can learn it.
Is that money is a learned skill. People think, and especially women, that I am born with the good with money gene or the bad with money gene, right? And it's just like learning a language or learning an instrument, right? When you first learn French, you maybe on the first day learn hello, goodbye, and where's the bathroom, right? Like that's all you're learning for the first week of your French classes. It's the same thing with money. Unless you had a financial education from your parents, which I was lucky enough to have, no one's teaching you this. You're not typically learning it in school. No one's sitting down with you and having a conversation about how to take on debt in a responsible way or like how to budget. No wonder you feel intimidated. No one taught you this. It is a learned skill. And every time you feel shame or guilt about like, why didn't I learn this and I'm so stupid? You're not stupid, just no one's taught you.
I couldn't agree more. Okay, so since we're talking about relationships, like, you know, marriage and money and all of this, and I do want to get to the specifics of accounts and all of that, but before that, I actually want to get your thoughts on something. What are your thoughts on bank accounts when you're married? Do you think everything should be in one? And I say this because my husband and I have different bank accounts, and we actually co-own a business, but we just like it that way. And I like being responsible for my money, and he likes being responsible for his.
So I am the
and
personal...
we have a joint one as well.
Yeah. So I am the personal finance expert that will tell you that personal finance is personal, right? Like every situation is different. But I do have a couple hard and fast rules. One is you need an emergency fund before you pay off debt. One is that you like need that emergency fund to be able to get out of bad situations, right? And one of my cardinal rules is you should never completely combine your finances.
Yeah.
Ever. I don't care the scenario. And again, there's some people out there who are going, but I love them and they love me. And doesn't it mean that like I'm financially cheating or I don't trust the person if we don't combine our money? No. It's you being smart and your partner being smart. You always, again, need a way out, even if hopefully you'll be together forever, right? But again, you want to be in a relationship that you both are opting into rather than thinking, oh my gosh, is he just here for the money or am I just in this for the money? So we do need separate bank accounts or separate accounts. So what I recommend for people, exactly what you're doing. Joint account for joint expenses, some separate money. If you want to combine it more than that, fine, but you need some of your separate money. And it's going to depend on couples. I counsel couples and I know some people who are completely separate and they live two very separate financial lives. And then they have really good conversations about what ways are we splitting money and splitting shared expenses. But I think the way that's easier if you do want like what I recommend, it is that joint account with some separate money. And I think, again, the most important thing you can start to do, whether it's with your girlfriends, whether it's with your partner, whether it's just like at work, start talking about money, have conversations about money. And when you're in a partnership, this is crucial because we know that half of marriages end in divorce. And the number one reason people get divorced is money, is stress about money, is not being able to be on the same page about money. So the best way to have those conversations is if you and I are sitting down and like we've talked about what we value. You know, we want to have kids in a couple years. We want to travel internationally every year. The question we're going to ask each other is, how do we use money as a tool to live the life that we want to live? So if we want to travel internationally every year, how do we use money as a tool to get there? Because it starts with the fun stuff, right? It starts with like, how do we build a lifestyle that we love? And then it becomes financial. So rather than getting caught up in like, you spent money on this and we didn't have the money and like it being a fight, you start with like, how do we build a beautiful life in a way that is collaborative? And then how do we use money as a tool to get there?
So I actually have like a strong opinion about what you said about the you spent money on this and we didn't have it. I actually think that a really easy way to circumvent that happening is
separate accounts.
Exactly. Like have your joint one for the joint things, your vacations, your rent. Your car, whatever the joint
groceries.
ones are. Exactly. But then if, I don't know, my husband wants to go buy himself a second car or a jacket, like that's his. Like he can do that.
I'm
if
getting
he wants
manicures and I'm not going to get yelled at about it.
No.
And that's the other thing too that I would love to talk about, because usually when I say this blows people's minds. So much about how we educate women and men about money is gendered and is split by gender. So I did so much research for my book about this. Spending in particular is the easiest thing to point to. So when I Google, you know, ways to be better with money for men, the answers are actually really great. It's great advice. It's make more money, expand, become the biggest, baddest, best version of yourself. start investing in the stock market, start investing in real estate, negotiate your salary, start a business, right? All really, really good pieces of advice.
Yeah.
What is the advice for women?
No, don't tell me it's not the same.
It's shrink. It's spend less.
Are you joking?
It's stop buying lattes. That's the reason you're not rich. You've heard it. I've heard it. Stop getting the manicures and the hair blowouts, because that's the reason you can't buy a house. So the advice for men is good. Expand, make more money, think more strategically about making your money work harder for you. The advice for women, shrink, hate your life, stop spending money on frivolous things. You notice how frivolous is never NFL season tickets. It's never golf clubs. It's never video games. It is shopping sprees at the mall. It is the very stereotypically gendered things.
Wait,
so
this is what?
This is what everything I do in my work is based on, is the fact that I want more money in more women's hands, and yet the entire system is not built for us. And even the financial education we're getting from a lot of the white guys who are screaming on the internet, it is bad advice, and it is split by gender. It's good advice for men, but it's stop buying Dior purses, you fucking cow, for women. That's the advice. And it not only is a double standard, but 99% of diets don't work because it's not willpower, it's psychology. If you tell me to hate my life, you keep me controllable, right? If you tell me I can't spend money on anything that I like, not only is it bad advice because there's only so much you can cut.
Yeah.
Right. There's only so much you can cut. Let's say you didn't spend any money ever on discretionary stuff. Okay, that's still not as much money as you could be making by investing or by negotiating your salary, right? But also too, what fucking life is that? That's not fun. That's not sustainable. It's not an accident. And I know I sound like a conspiracy theorist, but I have the data to prove that women, the advice we're getting around money is not only so gendered, but it's meant to keep us overpaid, the advice we're getting as women is meant to keep us underpaid, overworked, tired, sick of our lives, and frankly, pretty fucking miserable. And that's not an accident, because the patriarchy profits when we are miserable. So that's why I need women to take an active look in their money.
And you know what's really funny that kills me? It's when you earn your own money. I'm just going to put myself as an example, okay? I earn my own money. I have a business, which I started with my husband. We own our business.
Yep.
50-50. I worked my ass off to build it. And if I want to get my hair done or get my nails done or buy an expensive bag, I'm vain. You're
frivolous.
Ridiculous.
Yeah.
Where I'm just hello?
Don't even get me started too about the fact that you and I can't write off any of that. It's not a write-off.
I know.
Right?
It's actually ridiculous.
But we have to perform our own gender, right? We have to perform femininity in a certain way in order to be taken seriously. I literally talk about this for my book of me shooting the cover of my book, right? Okay, I have to do my makeup. I have to do my hair. I have to make sure, I've sat 5 hours in the salon chair for a cut and color. Not only is that $500, $600, I've also spent 5 hours that I could have been making money trying to perform my gender and femininity in the correct way. What if I don't do that? Well, then I get told I look tired at work. My book doesn't sell as well. I don't get the opportunities. I would love, and I'm sure you feel the same, maybe not, but I would love to show up to this interview. I don't have any makeup done. The bare minimum that men are allowed to do is okay, I throw on a t-shirt, maybe it's wrinkled, who cares? I combed my hair, maybe. I'm not blaming men, but this is the expectation for women. And then it's the very things we're getting shamed about, the makeup, the hair, whatever, are the very things that if we don't do them, don't spend money on them, we're not getting promotions. We're not getting speaking opportunities. We're not getting the ability to make more money. So it's a complete total double standard, and that's how we know it's bullshit.
Well, and it's also that it's okay for men to, as you said, spend money on their
their hobbies.
NFL
They're allowed
tickets,
to spend money on hobbies,
golf, whatever it is. But for
golf
women,
is networking, NFL season ticket. It's okay, cool.
Yeah.
They're this is their hobby. They really enjoy watching football. But the moment I buy Taylor Swift Eras Tour tickets, it is what are you doing? That's so much money. It's such a waste of money. And
no, it's so crazy. Okay, so I actually want to talk about how women can get smart about investing. What are the different accounts? Like the Roth IRAs, 401ks, there's so much. Where do they even start investing? Like, break it down for us in the most simple to understand way.
Absolutely. So, couple myths right off the bat that I need to debunk. First, people think that investing is just for rich people or you need a bunch of money to invest. That's not true. I can get you started with $20.
Retweet.
Please don't wait to start investing, because the second thing is people think that it's about the amount of money. It's really about time. If you can allow compound interest, which is when your interest earns interest earns interest, to work harder for you by giving yourself as much time as possible, you can start with a relatively small amount of money, but that grows over time. So please don't wait thinking like, oh, I'll figure this out next month or I'll figure this out next year. It's like, I hate to be fear-mongery, but it's true. You lose money every day you don't invest. So that's the first thing. Second thing, you don't need a Wall Street Chad to come save you. You do not need someone to manage your money for you. I know it's intimidating because they've told you it's intimidating. A multi-billion-dollar industry makes its money off the backs of you, off of making you feel like you're too stupid to understand. Like, again, not an accident.
And also the percentage fees that they take
is
so dumb.
But
you
again,
can do this.
No one knows this. You think 1%, 2%, 3% at Edward Jones is not that much. That is an insane amount in fees. That is your hard-earned money that is going to, statistically, a white dude who's going to mansplain to you and who's going to severely underperform in his job, because only 25% of professional stock pickers outperform the general market, outperform individual investors like you and I. I'm not going to a brain surgeon if he's only successful 25% of the time.
No, it's actually crazy, and it's so sad. And it's so common where people are like,
so
especially
common.
women, it's like, oh, I have a money
Because
manager.
I'm scared,
and I'm like,
and it's like jargon. And I'm not disparaging women at all. You are made to believe this. You were made to believe that there's jargon because, frankly, men love, like, they get off on making this feel complicated because it makes them feel smart. But also, like, this is the industry. It's built on making you feel like you just need to hand over your money to somebody else because you're too scared. And then the final thing is, a lot of people will say, well, investing's gambling. It's risky. It's like going to the casino. It's not.
It's on average, what, 8%?
8%, but that's average year over year. We're going to have some years it's less.
Of
but
course.
From 2020, probably mid 2020, right after the COVID kind of lull, from 2020 to 2025, so the early this year before the stock market started underperforming, we saw 140% increases. That's an insane amount of money that you're not getting anywhere else. So especially right now, everybody's like, oh my gosh, but the stock market's going to crash or there's a recession. I need you to stay the course. I need you to keep investing. And as long as you're focused on diversified investments, which I'll talk about in a second, it's not gambling. If you try to choose the hot stock, like, oh, Tesla, Nvidia, Microsoft, whatever, and I'm going to buy it when it's like the best time, that's the stuff that you're putting all your eggs in one basket. That's riskier. So let's talk about actually how to invest. First thing is you need to choose your account. So there's two basic types of accounts. There's tax advantaged accounts, meaning that the government is incentivizing you to save by offering you tax breaks. These are all retirement accounts. So 401ks, IRAs, if you're self-employed, like a SEP IRA, SEP IRA. And again, these are great because you put your money in, you get tax breaks from the government. Fantastic. There are restrictions though, or else people like Jeff Bezos would be putting millions of dollars in. So there's a certain amount of money you can contribute every year. This is where I personally, if I had money, I would start putting my money into those accounts because max them out because tax breaks. The other typical type of investing account does not offer you tax breaks, but also no restrictions. So you can put millions of dollars if you have it into those accounts. It's called a brokerage account. It's like a general investing account. So that's first thing. Figure out where you want to invest. Second is like, what platform do you want to go to open one of these accounts? So for the average person, I do not recommend DIY. These are platforms like Fidelity, Vanguard, Charles Schwab. These platforms are super confusing. I am a financial expert. I log into these and I'm like, wow, there are too many graphs and charts. There's too much going on. Just show me what I have to do. They don't do it. Again, this is where the jargon, I think, is pretty intentional so that you give your money over to somebody else and you pay them to manage it for you. So for the average person, I do not recommend DIY, although it does save you money because you're doing it yourself. But most people, especially most women, go in and they immediately get intimidated, and I can't have you not investing. So that's an option, not the best option. Robo-advisors are the second option. These are platforms like Betterment, Wealthfront, Wealthsimple, E-Trade, I think, has a robo-advising version. Robinhood, I think, recently just launched theirs. So it's exactly what it sounds like an algorithm is making decisions for you, which is great because it gets you started. So you go in and, you answer a couple questions like, what is your risk tolerance, and what age do you expect to retire, and how much money are you making? And then they're making decisions and then investing for you. Pro, you're getting started, which for me is the most important thing. That's great. But a couple cons. One, they're asking you questions that you don't even know how to answer. Like, everybody listening just heard risk tolerance, and you're like, no risk. I want no risk. Absolutely none, because risks seem scary. That's the wrong answer to this question.
It really
but
is.
no one tells you what the correct answer is. The second thing is that they are taking a fee. They're taking typically 1/4% to 0.5% for every single penny you invest. It's a great, again, thing to get started, but over 10, 20, 30 years, if you're investing with these platforms, that adds up. But the number one thing that I don't love about these platforms is that they are fishing for you rather than teaching you to fish. The amount of community members I have who will come to me and they'll be like, I've been investing in one of these platforms for a couple years. I still have no idea what the fuck is happening. Like, I don't know why they're choosing the things they're choosing. I don't still understand what an S&P 500 index fund is. Like, I don't know anything.
Pick your own, like what you want to put money into on your own on these platforms?
Sometimes, but with the robo-advisor, typically you are paying. That's the DIY thing, right? But again, for the average person who's getting in, that's terrifying.
Yeah.
Now, I'm going to shamelessly plug, I built the thing that I wish existed, which is, I joke, is the Hannah Montana, because it's the best of both worlds of both of these things. So it's called Stock Market School, and it's literally me teaching you not only in like workshops and courses and live coaching, but we actually built an app that teaches you and actually gives you the ability to invest. So I just rang the opening bell at the NASDAQ stock exchange because
that's amazing.
Thank you. We've had over $80 million invested by women, 80% of whom have never invested before joining Stock Market School.
Wow.
And like, this is my favorite thing. And it always makes me a little emotional, but like, we are not just teaching women how to do this. We are actively changing the statistics about women not investing. And so
wait, they can invest directly in the app?
we built an app without the jargon. It teaches you exactly how to invest. And then I'm doing live coaching every month. We're doing a kickoff, like investing 101 workshop. So you're taking an active role in your finances. And again, I'm biased, but I'm super fucking proud of it. So like, that's a great resource for people. It's an annual subscription. We have people who have been Stock Market School members for years. And so I will plug it now, but I can plug it later too. It's on my website, herfirst100k.com. If you don't want to go that route, this is where like robo-advising for at least a couple years is not a bad thing. And if you are going to work with a financial advisor, because that's also the follow-up question, it's always the follow-up question I get, is like, okay, should I work with somebody one-on-one? The pro is that you're getting that like one-on-one guidance and advice. That's great. For me, we have 5 million members in our like broader community. We have probably 12,000 in Stock Market School. I can't sit down with everybody one-on-one. We do group coaching. But if you really want one-on-one, that's the greatest place to do it. The issue with financial advisors, though, you need to make sure that they're two things. One, that they're a fiduciary. Thank you. They're legally obligated to act in your own best interest. And you're thinking, shouldn't everybody? According to Donald Trump, no, because he rolled it back. There's a lot of people out there who say they're financial advisors or financial professionals who will try to sell you on things that are extremely high in fees or commissions for them that you don't actually need. So please make sure, one, they're fiduciaries. My co-creators, my business partners that I work with to provide financial education in Stock Market School, they are fiduciaries. The second thing is you need to know how they get paid. If a financial advisor, let me try that again so you have it clean. If a financial advisor wants to charge you a percentage fee, fucking run the other way. And I will call you out by name. Edward Jones, you are on my hit list. They charge 3 goddamn percent. 3%. That's so much money. And again, for the average person, 3%, not a lot. I hope you're a millionaire. I hope everybody's millionaires. That's a lot of money. 3% is a lot of money. They also charge you a fee to open your account. They charge you a fee to close your account. They charge you an additional monthly fee to like manage your account for you. It's an insane amount of fees.
This is a scam.
It's a total scam. Total scam. So if you're working with somebody that's charging you a percentage fee, please run the other way. The average person does not need it. You need to work with them on an hourly basis. Typically, depending on your area, $200 to $400 an hour, which again is not cheap. This is why I put together Stock Market School because it's a more accessible resource. But if you want that one-on-one support, even for just an hour, a financial advisor who charges by hour is the way to go.
Yeah. Okay. Wow. This is, I mean, I feel like you explained so much for a lot of people. I didn't know that you could invest directly from your app. I'm
really proud of it. We built it.
it.
And like, it's something that I think, again, it's going to sound like it's never been done before, but it really hasn't. We either have like the investing courses and workshops, or you have the actual
it's never
like app.
A 2-in-1.
No, and especially like access to me and like education in that way. A lot of these platforms that are like the robo-advisors or like the digital platforms like Robinhood, they have like some education, but frankly not enough. And especially when we're in a moment like we are right now, where the stock market does feel really volatile and it feels really scary, and you're trying to get reminded of like, why am I doing this? I'm afraid, like I want to pull out all my money. You need somebody like me to come to you and be like, hey, I know it's scary. I know you're freaking out. Let's do a workshop about it. Let's talk about what's actually happening, and let's talk about the steps you can take to prepare yourself. And also let me remind you that this is a long game. So us freaking out and making like snap decisions, taking all our money out, not investing anymore, that's not how we want to approach this. We want to be level-headed as much as we possibly can, and then make steps so that if there is a recession coming, we're financially taken care of.
Okay, so then talk to me about the split. And like, I just want to touch on this real quick. And I think everyone should go sign up for your
I appreciate
app.
it.
It's incredible. And I think, you can explain it more detailed there. But for people like at this moment in time where, the economy, it's a little bit...
A lot of unknowns.
Lots of unknowns, exactly. How do you recommend they split their investment? Because there's obviously stocks, ETFs, bonds, etc.
Yeah. So let me get some definitions, because I think that's really important. And again, Stock Market School, we have all of this. We do all of this in workshops and coaching. Stocks are slivers of companies. So when you invest in Amazon, now granted, that's like owning a grain of sand on Bezos's beach, but you're part owner in that company. Pick any company that is a publicly traded company, meaning that they trade on the stock market. When you invest in a stock, when you buy a stock, you are now part owner in that company. You own a sliver of the company pie. Bonds, on the other hand, are the debt of a company or government. So when you invest in a bond, you're offering money to a company or government as a loan, and you're making money off that loan. Now, stocks tend to be more lucrative. They also tend to be more volatile. Bonds, on the other hand, less lucrative, but also less volatile. So what happens is, when you're thinking about stocks versus bonds, when we start, again, we were talking about this before, kind of like choosing the hot company or choosing the hot thing, we start putting all our eggs in one basket. That starts getting into riskier territory, where you do have more risk for losing money or underperforming. So we've come up with a group of stocks, and that's called a fund. So my favorite is an index fund. Again, we talk about why this is so great in Stock Market School, but an index fund is investing in hundreds, if not thousands, of different companies. So rather than just putting all of your eggs in pick X company's basket, you have your money spread out, so it is more diversified. That's the way I choose to invest. That's the way Warren Buffett chooses to invest. Like, this is not sexy. It's not exciting, but it's what makes millionaires. So when we're thinking about investing, especially if you're younger, 20s, 30s, the majority of your money, index funds, that's for me where I would put the majority of my money. And then as you age, you want less of your money in the stocks and the funds, because you want to keep more of that money. You're getting closer and closer to retirement. So we talk about the rule of 110. And the rule of 110 is just to take 110 and subtract your age. So I'm 30 years old, 110 minus 30, 80. So 80% roughly of my portfolio, the money that's in the stock market, should be in stocks or funds, 20% in bonds. And then as I age, I'm moving some of my money out of stocks, or I stop buying as many funds, and I'm moving my money over to bonds to kind of secure it better. So while we're talking about everybody freaking out right now, I'm going to first talk to like our younger folks. So 20s, 30s, maybe early 40s. You stay the course. You keep investing. This is why I talk about emergency funds. Like, that's your first priority always, is having that emergency fund. But if you are an investor, your 401k, your IRAs, if you're investing, we don't want to change anything up. We don't want to freak out, because for me, again, this is a long-term strategy, and everyone freaking out actually causes stock market crashes. It causes more chaos. We have to stay the course. If you are nearing retirement, this is where honestly, working with a financial advisor, if you're like over 45 and expected to retire at like 60, 65, this is a great time to meet one-on-one with them to figure out what your strategies need to be. Because yeah, you don't want all of your money in the stock market, especially if you're like 55, 60, like on the precipice of retiring, because yeah, that is where your stocks could underperform right when you need the money. So this is actually a great time to sit down one-on-one with a financial professional if you have the funds.
Okay, so say someone's listening to this and they're really excited now. They want to invest their money.
Yay, that's the goal.
It's so exciting, okay? But they have no emergency fund.
Yeah.
And they also have credit card debt.
Love this question.
What do they tackle first?
Yes. So as much as I would love to see you in stock market school, I would be doing you a disservice if I was just like, yeah, come over. You need to have your emergency fund first, and you need to have paid off your credit card debt. So in my book, we have an entire chapter on the financial game plan, and this is the order of operations. So first thing, always an emergency fund. Why? Couple reasons. One, I need you to have some money should something happen. And I don't want you going into more debt trying to pay for an emergency. So that's the first reason.
And how much should be in there?
3 months of living expenses in a high yield savings account. Cool. So you're going to total up what you spend the average month, multiply it by 3. That's your new goal. Second reason we're saving that emergency fund is we really prioritize mental health at her first 100K. I want you to, head hit the pillow at night, knowing that if shit goes down tomorrow, you're going to be okay. And finally, the most important thing, I need you to have a fuck off fund. I need you to have fuck off money where you as a woman especially have the resources you need to get out of an unsafe environment. Job, relationship, apartment, neighborhood. I need you to have enough money to be able to make active choices about your own life. So emergency fund first. Once you have that goal set aside, then you're moving on to your credit card debt. The rule I like to think about is the 7% rule, because you were mentioning like 7 to 8%, right, is the average return we can expect in the stock market. If your debt is more than 7 to 8%, that is all credit cards, by the way, you need to pay off that debt first, because you are currently costing yourself more money by being in debt than you could be making on the stock market. But this is a decision that ends up costing people millions of dollars. So I need you to listen to me if you've been tuning me out. Because you've heard that debt is bad, especially from these like traditional financial experts of like, you need to eradicate your debt at all costs. If you have something like student loan debt that's at like 4 or 5%, it's actually smarter to take the money that you were going to use to more aggressively pay off your debt and actually invest it. Because if it's under 7 to 8%, you could be earning more in the stock market than you're paying by being in debt. So if you have a mortgage, typically mortgages, student loans, these car loans, these are the kind of debt that is under 7 to 8% interest on average. And actually we want to be investing before more aggressively paying off our debt.
Okay. So I want to move on to audience questions, because I think that it will lead us back to this.
Cool.
Okay. So say someone has credit card debt and they're wanting to pay it off.
Yeah.
How do you do that or work towards that in a sustainable way while also enjoying your life?
Yeah. This is a great question. I think that, one, again, I'm not like your regular financial expert. I'm the cool mom, right? It's where it's like, I'm not going to tell you you can't stop, I'm not going to tell you you can't spend money, because it's not sustainable and it's not fun. And again, 99% of diets don't work. And it's the same thing with spending. A lot of people realize they're in debt and they go, okay, I'm going to get my spending under control and I'm never going to spend money. That's not realistic. And frankly, then it just causes more shame when you inevitably do spend money. So I think a couple things that we can really do. The first, automate everything you possibly can. So we were talking about that emergency fund goal first, right? If you take anything away from this conversation we're having today, automate your savings. Set up an automatic transfer from your checking account to your savings account. Maybe it happens every time you get paid. Maybe it happens once a month. And maybe it's a percentage of your paycheck or a specific dollar amount. And if you're financially struggling and all you can do right now is 10, 20 bucks a month, great. You're building the habit of saving on autopilot so you don't get to the end of the month and wonder, where did my money go? I didn't save anything. And then that guilt starts again, right? So if you can automate it, it's doing what we call paying yourself first. So the same thing with you trying to manage your debt with your normal everyday life. If you know you've taken care of your financial goals first, if you know, okay, I've put aside my savings for my emergency fund, or I'm on to step 2 and I'm trying to pay off my credit card debt. If you have money going to paying off your credit card debt first, then you're not stressed when you get to the end of the month and you're like, I didn't do anything and I promised myself I would. So it takes the guesswork out, which is really nice. Second thing, we have so much so many resources that we talk about in the book and the podcast about mindful spending, because the vast majority of people, again, I don't need you to stop spending money. I need you to stop spending money on shit you don't care about. Like, so many people use spending either as like an emotional coping mechanism, or because it's like, I need a break at work and I'm going to go buy this coffee that I don't really need and I don't really want, but I just like need an excuse to get out of the office. Like, go take a walk. It's okay. And I'm not demonizing coffee, but like, if you don't actually taste that coffee anymore, or it isn't something you look forward to, like, don't spend money on it. So I like identifying for people your 3 value categories. That's what I call them. They're the 3 areas in your life where you get the most joy. So for me, that's travel, food out, and plants. I love my plant babies. I have like 55 of them at home. I just love spending money on them. Now, do I buy the occasional coffee? Yeah. Do I buy clothes? Yeah. But the vast majority of my discretionary money is going to the things I actually love. And then every time I do go to spend money, I'm asking myself, hey, is this worth not being able to buy a plant? Or is this worth actually being in debt longer? Sometimes the answer is yes. Sometimes the answer is no. So just being more mindful of when and how am I spending, especially if I know I'm already in credit card debt. It's really hard to dig your way out of a hole that sand keeps slipping into. And that's what's happening, right? If you continue mindlessly spending while you're also already in debt. And I think the final thing for me is just understanding that so much of money is shame and anxiety and fear. More shame does not help. So if you can offer yourself grace, if you can speak really kindly to yourself, if you can follow folks like me and so many others who are providing financial education in a way that doesn't make you hate your life and doesn't make you feel terrible about your choices, like, that's going to get you to the place you want to be, as opposed to needing like tough love. Tough love is just abuse. Like, it's not helpful. We both have the stats to prove that, but also think about the times like you were on a team, or, you know, growing up playing soccer or baseball or whatever. You needed your coaches to be assuring. Mm-hmm. You needed your coaches to be supportive. I had coaches that were both that and coaches who weren't. And guess who I liked being around more? It was the coaches that cheered me on. And when I made a mistake, said, okay, hey, what did we learn from that? And how can we do differently? They didn't yell at me. They didn't scream at me. They didn't make me feel bad. And I think it's the same thing with money.
Mm-hmm. Yeah. I mean, I love that. And I love that you talk about these like 3 kind of pillars for what you want to spend money on. I often think that, unfortunately, a lot of us make kind of emotional decisions.
Absolutely.
When it comes to spending. So like for me, one of my buckets is fashion. I love fashion, always have.
And you look fantastic.
Thank
so I
you.
get it.
Thank you. But I think being mindful about what I'm spending on is so important. So like, I'm not just going to pull the trigger. I have like an ongoing list on my notes app where I keep tabs on everything that I want.
Right.
And then I'll look back on it either a few weeks later or a month later, and I'll be like, oh, I still want that thing. Okay. Yeah. Means I actually need it.
I love that trick. I always tell people, like, nothing tastes worse than a pina colada on the beach with a side of guilt, right?
Totally.
Like, nothing tastes worse than you going to that incredible concert and in the back of your head going, shit, I can't afford this though. I can't have a really good time because I know I have a credit card payment that I can't afford at the end of the day. Like, I want you to spend your hard-earned money on shit that you actually like. I want your hard-earned money going to making your life better. Mm-hmm. I don't want you to stop spending money, but I do want you to be able to go into these purchases, being able to fully enjoy them and be fully present and know, like, yeah, I'm going to look fire in this outfit because I can afford it and I feel good about it and I made a thoughtful, intentional decision about it.
Totally. Okay, next question is, do you have a favorite credit card?
Absolutely. Yes. I have all of my credit card recommendations linked on my website. I'll give you the link if you want to drop it in the show notes
please.
Too. It's going to depend on your life, right? So for me, when I first started, when I was in my early 20s and my credit score wasn't super high, a general cashback card that gives you like 1.5% cash back on everything is a great card. I have the one I use and recommend on my website. The one I use now, though, is very different because I've built up my credit over time. I have one of those nice, sleek metal cards that gives me like lie down flat seats to Europe on credit card points. And that's my favorite. And what I wish people understood about credit cards, a couple things. One, credit scores, credit cards, they're not the devil here. I love credit cards. I use it like a debit card. So I don't put any purchase on a credit card that I can't afford to fully pay off.
Yes.
It builds my credit. And second, especially right now with everything going on and everybody having financial anxiety, My credit card is almost like a secondary emergency fund.
Totally.
Like I have points if I need to fly across the country last minute because someone in my family gets sick. Let's say I'm in Europe and like the hotel I booked isn't what I thought it was going to be. Great, I can book another hotel on credit card points. It's not going to cost me more money. I was just in London about a year and a half ago. Brand new iPhone I just had, I bought for the trip, got stolen. It was, $800, $1,000 stolen. I had credit card insurance. I had like phone insurance through my credit card.
It's really incredible.
And so like this is a secondary emergency fund.
Totally.
So building your credit, allowing yourself to use credit responsibly, meaning you're paying your bills on time and in full, is one of the greatest tools you have to up-level your life, but also to get all of the free sexy shit as well as the emergency stuff that you don't realize you need until you need it.
I love that. Okay, this is the last question that we have time for. Honestly, you need to come back for a part 2 and a 3 and a 4.
That.
Okay. Is it worth getting a Roth IRA or not?
Oh, that's such a general question. I would always say yes. Now, I'll caveat because I imagine what this person's asking is like, I have a 401k at work. Is it worth getting like an IRA too? So ultimately, before I say anything else, please listen to me. I don't care where you're investing your money as long as you're doing it. I don't care. People get caught up in traditional IRA, Roth IRA, which one do I choose? And then they get an analysis paralysis because they're so afraid of making the wrong decision that they make no decision. I need you to just do it. Like imperfect action beats inaction every single time. And like, again, we're losing our money when we're not investing. So whether you're wondering like, what account is right for me? Truly just choose one, start investing. You can optimize over time if you need to. However, if you are someone who has a 401k through work, and it offers an employee match, meaning that you're contributing money and your employer's matching that contribution. That's great. Take it. It's free fucking money. There's nowhere else in the world that allows you to get your money doubled for you doing no additional work. If you don't have a 401k match though, I would actually suggest not contributing to your 401k first, putting your money in your Roth IRA because that is an account that you own. Your IRA stands for individual retirement account. That is an account associated with you. It's not with your employer. Do everything you can to max that out. And if you still have money left over, then go back to your 401k. Again, the reason for that is that you have control over where you open the IRA, what you're investing in. You have less control with the workplace 401k. It also doesn't follow you if you leave jobs, right? You have to roll that 401k over. You have to track that money. So if you don't get that free money, that match through your 401k, I would actually recommend maxing out your IRA if you can first and going back to your 401k.
Okay, and I do want to call something out because I believe you can only start a Roth IRA if you earn under a certain amount.
Great question.
What is that amount?
Oh gosh, it changes every year. I think for this year it's like $167,000. Please don't quote me on that. I have a lot of numbers in my head for all of this.
No, that's okay. People can go fact check that. It's just I wanted to call that out because it's something that people may not know.
Yeah, and what you can do is if you are a higher earner, you can do what's called a backdoor IRA. So you can contribute to what's called a traditional IRA and then move the money to the Roth. There's tons of like resources online and in Stock Market School about how you can do this. You can also just contribute to your 401k, to your traditional IRA. And again, the difference between traditional and Roth is how it's taxed. Traditional means that you're paying the tax when you retire, when you withdraw the money. Roth means you pay the tax now. If you do have a choice and you do qualify for both with your income, I love the Roth IRA personally. One, because it's like giving 65-year-old me a little gift. It's like, hey, 30-year-old me pay the taxes on this so you can go drink Sauvignon Blanc with lunch and like flirt with your much younger Pilates instructor named Luca. And that's like my real life retirement plan. Like 65-year-old me is living her life in the Italian countryside with all her adopted dogs. She fucking loves her life. And so it's like, hey, take this money, don't worry about it. Second thing is like, I don't know what taxes are going to be when I retire. It could be better. It could be Hunger Games. It'll probably be Hunger Games. So I'd rather just pay my taxes now knowing how much money. But again, my big thing, it does not matter. Just pick one. Just start investing.
I love that. Good place to end. Tell everyone where they can find you.
Thank you. herfirst100k.com or at herfirst100k on Instagram, TikTok, and Financial Feminist is the name of my book and podcast.
Thank you so much for being here. This has been a joy.
Thank you.